So I'm delighted that we have now the opportunity to hear firsthand from technology providers and consulting firms about their offerings. We'll follow the same format. Every participant will have 7 minutes to showcase their latest offering and expertise in terms of financial technologies within the secondary repo and collateral space. And I'm delighted that we have 4 different vendors and firms presented here. We have Murex, we have D2 Legal Technology, we have Valantic, and also EquiLend. And I will first give the floor to Murex, to Sabine Farhat, who is the head of Securities Finance Product Management at Murex. Thank you.
So today we believe that we need to actually do more and do better. There is a quote that I like to share with you. They always say time change things, but actually we have to change them ourselves or yourself. And it's a bit related to what our colleagues in the panel were saying, that it's not a psychological thing that change doesn't happen, because time will not fix things. We need to do stuff to make technology happen. So what are the new standards and technology on the market? And what is a necessity to solve today? So we had SFTR as a regulation. We had distributed ledgers that we heard a lot about today, optimization, crypto, tokenized traditional assets, CDM, digital-backed assets, artificial intelligence and algorithmic module, and digitalisation. Those are only to name few. So they are standard technology, what they are solving, but what we need to solve as well. So actually, we need to reduce cost. It's a normal thing everybody's talking about since maybe 15 years now. We need transparency of the market. We need efficiency. Optimal asset allocation. Today, it's important in the collateral scarcity market to have a possibility to select the optimal asset. We need financing diversification as well. Our market in repo and collateral and even sec lending, we need the possibility to diversify our portfolios and finance differently, especially with the liquidity volatility. And of course, we need the collateral availability. Today, the scarcity is not because it's not available on the market, it's the mobilization that is problematic today. So is those standards and technology are solving what we need? Probably yes, but in a fragmented way, and probably part of what we need to solve, or what is a new technology, is solving part of the problems, but not seeing it holistically. So the situation is, on the repo and collateral space, we have fragmented solutions. So definitely, today, the institutions, whether buy side or sell side, have a lot of solutions to solve the same problem, and sometimes duplicated in the same institution. We have partially standardized. As we mentioned earlier, we still have paper confirmation, fax machine, and part of it is fully standardized, so it's a bit problematic. And we have high touch, double booking. We still have the same trader doing booking in 4 systems for the same trade, because this is how it goes. A reconciliation between 2 traders that are sitting next to each other because they are using 2 different systems for the same thing. And the most important part maybe is not technology today in this space, but organizational challenges. And these vendors we cannot help. Organizational challenges because today there is no clear owner of the P&L generated from collateral, repo, or the centralized collateral of the institution. So what is the solution from a vendor perspective, or how we heard the issues on the market? Today, we believe that through an integrated platform, when you can integrate, you can automate. And here, when I say automate, is mostly to automate the process internally, the chain from booking to the difficulties of post-trade. We need to rationalize to advance as well. We need to be able to have interoperability of the market, streamlining of the systems. Otherwise, we will not be able to advance and use maybe algorithmic models in the space of collateral and repo. We need to harmonize our ecosystem. Our ecosystem is not simply booking and post-trade, it's market providers on the market, and we need to work hand in hand the different vendors of different services in the market. And finally, we need a new organization for the new mandates and a clear idea, at least collective decision-making on how to build this new ecosystem for the new era. So what we have done is we have built an integrated business solution to holistically manage securities and cash exchanges while providing actors with STP tools internally in order to optimize their decision-making processes. So the three main areas we focused on from Murex perspective today, and we believe it will be helpful that we work together in order to implement them, is specifically the centralization for monitoring of the SFT activities and collateral. The diversification of financing has been very difficult lately, and the richness of the product catalog for not just booking repo, but stylized SFTs that involve repo and other type of products for cash exchange and collateral exchange is becoming mandatory. And all of this needs to be done in a low-touch system with optimized costs. Double booking, bi-directional reconciliation are becoming very complicated. And this is to prepare the next ecosystem. The DLT, the digital assets, the artificial intelligence will come when we are capable as an ecosystem to at least build internally the harmonized, automated system. So how Murex is offering this today? We are an integrated platform that is rationalizing the system, and with this capacity, we can automate. So some highlights is a one go-to stream. This screen actually is important because you are doing the full trading activity and collateral management in a single system, you are capable of monitoring the full position of your institution in a single system without any reconciliation. And even with the organizational challenges that are different collateral and securities management is done in different desks, they are using the same system in real time, so they have the capacity to build decision-making based on actual data. And when we have this full centralization of collateral value, we can monitor as well its risk immediately, and we can monitor the exposure in real time with even if a real-time market data feed and not just close of business prices. We can as well have the capacity, because of the organizational challenges, to sweep even position and create from the super inventory, sub-inventories that the different desks are operating, and not just sweep the position, but sweep the financing and the cost of operating those collateral. And finally, we can analyze the position, because when data is centralized, we can build reports to understand the data. We can calculate average rate. We can calculate opportunity cost. We can see different maturities, different liquidity profile of our positions. All of this is at the lowest cost because we are using a single system. The other important topic is diversification of financing. So if we have a single system, but we are not capable of booking trades within it, it's complicated. So we need to think differently. Repo is no longer just a trade. Today, there is repo-style trades. For instance, synthetic repos, ability to book repos synthetically and be able to book the hedges at the same time in an automatic life cycle is important. Or cash pools under GMSLA, they are repo-like. Or even optimization of allocation of assets. So this is what I wanted to share with you today, the importance of the integrated platform and having it in a single system from trading, collateral, operations, and SFTs. And finally, I would like to get back to my first quote, and it's not technology that limits us. We are the limitation. We can't fundamentally advance technology until we fundamentally advance ourselves. Thank you.
My name is Simon Maharaj. I'm a managing consultant at D2 Legal Technology, a legal data consulting firm. We're made up of lawyers and technologists, and we scour the market looking for what is currently at stake. And what we have noticed is that when it comes to onboarding counterparties for closeout netting, we make life far too difficult for ourselves. What we've seen is that when it comes to netting in the repo market, the issue is a well-known one, which is that counterparties, when they're being onboarded onto trading platforms, we want to be able to net with those counterparties. When we can net with the counterparties, we can reduce our exposure to those counterparties, and there are regulatory benefits for that. However, in practice, we're making life very difficult. So as a lawyer, we have to review legal opinions and check the counterparty LEI, the entity type, to make sure that the legal opinion covers that counterparty. In theory, it sounds fine, but in practice, it's a very laborious and time-consuming task. So at D2 Legal Technology, we've come up with a solution which is on the right-hand side of the screen, and there it's the future state. We can use data to solve this problem. This is the theme throughout today's conference. We can really apply data to automate and streamline processes. And whereas currently on the left-hand side of the screen, you see different entities are onboarding their counterparties in silos individually, and therefore all of the man hours that are being used to onboard those counterparties is obviously extraordinary, but we can really streamline the process using data to have a central utility which does the analysis once, and then all of the entities can consume that data downstream. And you'll get with that all of the regulatory capital optimization, the BCBS 239 compliance from Basel, and the ECB netting reporting compliance. So what we propose is a very simple three-step process. Steps 1 and 2 are done by the utility. We determine and document the counterparty jurisdiction or formation and entity type. That's a simple review of the formation documents. And then 2 is to link that to the relevant legal opinion. Once you've done that, it just goes back to the in-house legal team who make the final netting determination. But in that three-step process, we have resolved all of the manual labor issues, and we can automate that process with a data-centric formula. Now, the counterparty determination report itself is forensic in its detail. It needs to be because there are regulatory issues at risk. So for prudentially regulated firms, and even those who aren't prudentially regulated, but still require this for their business optimization, all of the details on screen will be listed in the report. So you have the LEI, the entity name, scope determination, jurisdiction, entity type, scope determination date. And importantly, all of the supporting evidence is supplied with the report. So that includes screenshots of all of the registry and public records. Because when it comes to the regulators, and we have had regulatory interventions on this, they don't just want to see what the answer is. They want to see you're working. It's like being back at university. You need to be able to get marks for showing you're working. So there has to be a clear-cut audit trail showing how you got your netting determination. And then the relevant legal opinions are also extracted so that that data can be consumed downstream. So I will just finish with this video. Thank you very much.
Good afternoon. My name is Luigi Marino, and I'm here today to introduce Valantic FSA and our trading solutions. Who are we? We have over 20 years of experience in building advanced trading platforms for low latency pricing, quoting, and trading across the fixed income markets. We offer trading solutions covering the full workflows for repo, rates, and credit. Today, during my presentation, I will be focusing on our repo solution. When we built our repo trading platform, we wanted to build a solution that solved problems and facilitated the work for both the business and also the technology. We wanted to have a product with a modern GUI, modern look and feel GUI, very simple to use, but at the same time based on a very powerful and stable engine. When we look at some of the benefits that our solution provides to the business, we see that it's very simple to use, but at the same time, it covers all the workflows for the European, UK, and US repo markets. We aggregate all the pre- and post-trade data across all the repo markets and display all the data in the GUI. Traders can import and manage all the inventories into the system, and they can also send orders across all the repo markets with just a few clicks. During the day, they can monitor the inventories, but main of the work is done usually with a couple of clicks early in the morning. Of course, they can send also orders on individual instruments, still leveraging advanced strategies and splitting orders across the different venues. It is possible to create multiple watch lists on which traders can set rates alerts for specific positions and then get notified every time the alert has been triggered, so to not miss any rate updates. Nice notification will notify the trader. The GUI is a web-based GUI, then is instantly available. There is no startup time. Traders can switch between different workspaces. They can even share the workspace with other users. We offer advanced filters on every available grids of the system, such as the instrument grid, position manager, order trades, plotter, ticker. Traders can create multiple views on every grid, setting advanced filters, and then look specific to the data they want to look at. It's also possible to set conditional formats, even building charts and dashboards directly into the GUI. This means that there is no need anymore to download the data, extract the data from the system into a spreadsheet, for example, to then build the charts and dashboard there, because this can be done directly on the system, leveraging all the historical real-time data that is available on our GUI. Then even non-trader users get benefit to access our system because they can usually build a nice dashboard and monitor everything that is happening on the market and the traders' activities, such as volume per trader, volume per market, orders, any other activities. What are the benefits that our solution provides to the technology? The repo platform provides an HTML5 web user interface. That means that the only technical requirement to access the GUI is to have a web browser installed on the trader machine. No other application need to be installed, just web browser. Also means that every time we release a new update of the software, then this is instantly deployed because once again, no application need to be installed. We offer a SaaS-based delivery model that resolve maintenance headaches for our customers. Since it's a web-based solution, it addresses the InfoSec compliance concern. It is FDC-free compatible. It's also very easy to interop with other applications or even connect to different backends. That means that we can have, the user can have only one UI connected to the repo system in addition to any other backends, even spreadsheets full of data, or other application, everything under the same look and feel UI. There are no need to have multiple applications, they look different, just one connected to all the different applications. And they can also leverage our technology, such as the advanced filters, charts, pivoting the data. Now we are applying this approach to the other Valantic FSA products, including the South Trader workflow and the bond and trading platform. Thank you for listening to our presentation today. During my main 3 slides, we have seen a few video clips of our repo platform. But if you would like to see a full demo of the solution, please come and see us in the exhibition at our stand, or feel free to reach out to us directly. My email address and website company are on the deck. Thank you very much.
Hi guys, and thanks for having me here today. I'm Mike Norwood, Head of Trading Solutions for EquiLend. For those of you who don't know EquiLend, we are owned by 10 large financial institutions. We have grown up over the last 20 plus years as a technology vendor focused on providing efficiencies into the securities, lending, and collateral spaces. Right? So we were brought up to solve inefficiencies, to create protocols to automate the communication of inventory, to facilitate the execution of securities lending and repo contracts, to allow for autonomous trading, the elimination of reconciliation breaks, and the management of post-execution lifecycle events for outstanding contracts. What I want to talk about here kind of builds on some of the themes that we've discussed earlier through some of the panels, right? I think if you look at the industry, equity was certainly quicker to embrace automation, to embrace technology, to implement change. The fixed income markets have historically been a little bit slower to do that. Some of that is due to the relationship nature of the business. Some of it's due to old habits die hard. But I think as we look at the landscape, as we look at the technology vendors who are out here, we do have tools that can facilitate change to increase efficiency, to reduce cost. If you look at our full suite of solutions, they are designed to be modular offerings. So you can pick what you like, you can use what you like, you can evaluate the suite of services, and implement tools that will solve your particular problem. At the center of our transactional suite of services, which includes NGT, that's our flagship electronic trading platform. 95% of that volume that goes across the platform on a daily basis is completely autonomous, no traders involved. It's happening, algorithm to algorithm, machine to machine, to the tune of about 125 to 130,000 contracts a day, worth somewhere around $175 billion US. We're processing about 40,000 returns a day, about 30,000 recalls on outstanding contracts. We have the ability to provide mark-to-market reconciliation. Obviously, rate changes is something that we are focused on and is in development, and that's with the aim of servicing that central circle, which is our one-source initiative. So in pilot stage right now, we are in the process of developing and launching a DLT solution to eliminate the need for reconciliation in our markets. Right? So if you look across today, OTC markets, everyone's using separate data sources, everyone's managing their own version of a contract. It yields tremendous amounts of inefficiency, breaks operational cost and operational risk. DLT is the one source initiative is designed to eliminate that by forcing everyone to bilaterally agree modifications to outstanding contracts and feeding it into a shared ledger of which you can host a node or you can connect via API. We aim to eliminate those breaks, eliminate that operational risk, and enforce sort of a golden source of information across our client base. Now, that's something that we have 5 pilot clients right now. We've done some beta testing. There's been transactions that have been executed over the last year. We are looking to go live towards the end of next year in a full production space. That is asset class indifferent. So we are looking for the equity as well as the fixed income community to embrace this. And I know for many of you out here, you might have thought of EquiLend as an equity shop. That's certainly where we built the bulk of our volume, but at this point, we're up to about 28% composition is fixed income across our book. Building on some of the trends we've seen earlier, there's been a tremendous demand across the platform for fixed income ETFs this year. There's been a tremendous amount of interest in our DLT solution. And then we've seen a tremendous amount of uptick from European participants in embracing the automation. I would say, in accord with the earlier panel, Europe is definitely ahead of the US in that stance. I think from a total automation perspective, we see clients here who are automating up to 90% of their trade execution. In the US, that's down between probably 55 and 60%. Fixed income here has grown substantially, and it's been leading the charge. You know, I think the advent of T1, the regulatory regimes here, and if you look at CSDR and SFTR that have been introduced over the last couple of years, have certainly done away with the appetite for embracing risk, embracing manual trade entry and relying on automation. You know, and we think those tailwinds were certainly going to continue. T1 will push people to do things more quickly, more accurately, and DLT solutions are optimal in terms of being able to manage that, making sure that you understand your inventory and are able to respond to your various demands in as quickly and efficiently a manner as possible. Our volumes have grown, as I said, so just by way of some high-level stats, we've seen 34% growth in fixed income over the last 2 years. We've seen 52% growth in inventory broadcast in the fixed income space across our platform. We saw a record quarter in Q3 with $1.3 trillion executed in the fixed income space, and we had a record day of 42,000 trades versus 25 billion notional. If you take that back a couple of years, we've seen 100% growth in fixed income over the last 4 years, and along with our transactional suite of products and our post-trade suite of products, we also offer a robust data product to provide benchmarking, relative pricing across asset classes, and comparisons to the market. So just want to say thank you for your time today, and certainly any questions, do please reach out.
It's always interesting after the panel discussion where we had an outlook looking towards the future, what's really driving the agenda, whether it's simply more efficiency, more electronic trading, whether it's in bonds, in fixed income ETFs, discussions around T+1, which certainly will require more for tech build and the uptake of technology to drive this collaboration importantly as well. Perhaps I will start with the audience. Are there any questions from the audience before? I may have a question or two, but I will pass it to the audience. Is there anybody who has a question to our panelists? Okay, if not, then I will make a start with a question. Looking ahead, there's so much going on. There's, on the one hand, on the regulatory side, there's refits, SFTR refit, there's US rules, whether it's the SEC 10C1 for securities lending, OFR rules expected for bilateral repos, EMIR refit. Of course, there's the T+1 discussions as well, which will have an impact. And there's, on the other hand, the emergence of digital securities, where some of the questions are, how can you actually repo out such a security? What's your perspective on, when you look ahead, what's kind of the key issue where you think that you can assist, or what your key focus is going to be? And perhaps I will just start in the order here with you, Luigi.
Thank you. Well, in our case, since we are more a trading solution, so it's a vendor side, everything that is done on the market venue side, then we always tend to support everything in advance before going live. So if it's a new digital security, for example, or even like on the terms of technology, then we try to always talk to the market venues, understand where the market is going, if it's a new product, and then make sure that everything is supported on our side. But we always focus more on supporting the workflows for the market venues, and then announce this in our technology for helping the users to make more educative decisions.
Okay, great. I think that's a very clear message to kind of focus on that particular area and to support the existing kind of trading and further electronification, which of course is a theme that has been, that continues, where we also expect to see more of. Simon.
Thanks, Gabriel. I think what I'm very excited about is the cross-trade association development of the CDM, the common domain model. So looking at it from the legal perspective, once you've got your contract drafted, and that feeds into now the CDM with the relevant JSON file being uploaded, and that then feeds into the collateral systems and the downstream systems for your regulatory reporting from the post-trade perspective, to have that all consolidated in one place is extraordinary, and that will really reduce the number of disputes that we have seen with margin calls and make sure that the whole process is much more streamlined. I think the second thing from a legal perspective is the deployment of generative AI. We've had ChatGPT mentioned a couple of times in today's sessions. But I think as we see that develop more into the deployment phase from the initial excitement phase, we can really see accelerated processes in legal drafting and then the application of that to the downstream systems.
Okay, that's very interesting, and of course also very timely. We've issued a release yesterday, a press release together with Finos, ISDA and ISLA on the latest CDM release, which includes the possibility to now use the CDM to also include legal master agreement elements into this. And of course, there are now, the CDM fully supports all types of different repo transactions and structures, and also additional derivative products that have been incorporated into the CDM, which is free and open source. Michael.
Yeah, I think from our perspective, we're focused on removing inefficiencies in your existing book of business and freeing up human capital to focus on the value add, the new, the different, to do the diligence, to make sure that you're establishing a framework that makes your organization scalable for the future, no matter what direction that takes, whether it's down tokenized assets or whether it's something more more germane. But I think, or mundane, excuse me. But I think further to that, we are absolutely interested in increasing access to our markets, right? We think that the successful deployment of technology removes barriers to entry. It allows for more participants. It allows people to do more with a smaller footprint. And as such, we've made strides into the books and records space with an acquisition of the Spire technology platform. We've integrated that tightly with our trading, post-trade, and data services. And we think that we can offer a compelling solution that makes it easy for new entrants to understand and embrace the market.
Right. Sabine.
Thank you. So from Murex perspective, I tried as much as possible already to illustrate how we are positioned. From a technology perspective today, what we are trying to do is mostly work with our clients for time to market. In a sense, we see a lot of evolution or revolution even on the market when it comes to a different type of collateral type of exchanges. And in that sense, typically, like we've heard, digital assets are becoming eligible collateral. So this is a space that will be added soon. So how we are positioned is our solution will cover front to back to risk, the capacity to operate and process and calculate risk of any collateral assets in a different type of transaction. And in that sense, they will know that using the system will help them to be able to diversify and reduce costs. In a sense, this is like the motto of why we are using an integrated platform. So be ready for the new technology in a way that your ecosystem is stable and harmonized.
Okay, that's great. And it's always very useful to hear firsthand about your solutions, and it's also having these demos, because often it's of course good to talk about, but having kind of a visual insight into this as well, and the capabilities, given with everything that is on the agenda and digitization that will be driven further. And it is a continuous trend, I guess, which is driven by certain events at certain points, but will continue. So thank you very much for joining us here for the presentations and also this discussion. Please join me in giving a round of applause.